Bismillahirrahmanirrahim. Assalamualaikum dan selamat sejahtera Datuk Seri, Datuk-Datuk, Datin-Datin, Tuan-Tuan dan Puan-Puan sekalian. Saya Rosnita Binti Ahmad, Pengarah Bahagian Ketetapan Jabatan Dasar Percukaian. Ini merupakan inisiatif pertama Jabatan Dasar Percukaian dan Akademi Percukaian Malaysia untuk mengadakan sesi pembelajaran secara YouTube Arena Hasil. Pembelajaran ini juga merupakan era baru untuk generasi sekarang, dan JDP sentiasa berusaha untuk menggunakan pelbagai platform untuk memperkenalkan produk-produk JDP seperti ketetapan umum, garis panduan, nota amalan dan lain-lain. Ini juga merupakan platform untuk cawangan untuk memberikan komen, maklum balas berkaitan produk-produk JDP untuk penambahbaikan. Komen-komen tuan-tuan dan puan-puan sekalian sangat-sangat dialu-alukan. Dan puan boleh masukkan di dalam chat box ya. Tuan-tuan boleh masukkan dalam chat box dalam YouTube. Selepas taklimat ini, JDP juga akan ada perancangan untuk taklimat dibuat oleh bahagian-bahagian lain di Jabatan Dasar Percukaian, terutamanya mungkin daripada pengarah bahagian konsultasi galakan cukai yang akan bersara pada tahun ini. Saya juga maklumkan bahawa taklimat ini akan dikendalikan dalam bahasa Inggeris, kerana banyak terma-terma dalam KU ini lebih difahami dalam bahasa Inggeris, tetapi dua bahasa juga akan digunakan. Jadi saya berharap semuanya akan merujuk kepada KU bilangan 11 2018 semasa saya memberikan taklimat ini. Okey, kita pergi kepada slide pertama. So this is an overview of the public ruling. So public ruling 11 of 2018. This is actually replacing the public ruling of 1/2014, which is dated 23rd of January 2014. So the reasons why we have made amendments to the public ruling is due to the amendment to the Finance Act, which is with effect from 17th of January 2017, and also on the Income Tax Exemption number 9 Order 2017, which is PUA 323/2017, with effect from 6th of September 2017. This I will explain later in the next slides. And the importance to determine non-residents which are subject to Section 4 capital A of the Income Tax Act, as the non-resident persons would be subject to withholding tax under Section 109 capital B at the rate of 10% from the gross amount. So in a public ruling, we would have objectives and provisions of the law. So what is the objective of the public ruling? Firstly is to explain the special classes of income which is chargeable to tax under Section 4 capital A of ITA. And what is the deduction of tax from special classes of income? And what is the consequences of not deducting and remitting the tax from special classes of income? So the provisions of the law, those listed are the provisions which is related to 4 capital A, and also other provisions related to the 109 capital B. And the subsidiary law which we're going to refer under this public ruling is the Income Tax Exemption number 9 Order 2017, which is the PUA 323/2017. Okay, so that's the overview of the public ruling. In the normal circumstances, the public ruling should have the background, the objective, and what are the provisions of the law that explains the topic of the public ruling. Alright, so next, what does this public ruling actually explain is the special classes of income of Section 4 capital A, which is the income of non-resident person which is chargeable to tax in Malaysia if it is derived from Malaysia. Right? So when it is deemed to be derived from Malaysia, then who will be responsible? The payment responsibility to withhold will be the government or state government or local authority. Next will be the person resident in Malaysia. And next is the charged as an outgoing or expense business carried on in Malaysia. So as long as wherever payment that is charged as an outgoing or expense in relation to the rest of the criteria, then it will be subject to Section 4 capital A. So that's the provision of the law. So what comprises of section 4 capital A? We have paragraph 4A Roman 1, which is services rendered in connection with the use of property or rights, the installation or operation. Next is the 4 capital A Roman 2, amount paid in consideration of technical advice, assistance or services rendered in connection with technical management or administration. So I'm just going to explain here, why does the word technical management or administration still exist here? Because this public ruling of 11/2018 was issued on the 5th of December 2018, which is before the new law which we have amended in 2019. So this is the current law when we issued the public ruling. So the word technical still exists in this public ruling. We will amend the public ruling in this year to take out the word technical, which is in accordance with the amendment of 2019. Okay. Next would be the 4 capital A Roman 3, which is rent or other payments made for the use of any movable property. Alright, for 4 capital A Roman 1 and Roman 2, I have explained just now why did we amend this previous public ruling under this new public ruling, because effective from 17th of January 2017, income of non-resident person which is derived from Malaysia is chargeable to tax in Malaysia regardless of location where services are performed. So which means wherever it is performed, wherever the service is performed, whether it is outside or inside Malaysia, it will be taxable under 4 capital A. So that was the amendment that we have made on 17th of January 2017. Amended this law because we know that we have to be aligned with the international taxation. We need to ensure services being rendered, whether it is from outside or inside Malaysia, it should be chargeable to tax under section 4 capital A. This is more of, we have the digital taxation that is currently now being the issue internationally. So at least Malaysia has come to this position and we need to tax wherever services are performed. But what happened is that after the law that has been gazetted on 17th of January 2017, because a lot of complaints came in that the government had to come out with this exemption order with effect from 6th of September 2017, which mentioned that income derived from Malaysia in relation to paragraph 4 capital A Roman 1 and paragraph 4 capital A Roman 2, which are performed by the person outside Malaysia, would be exempted to be taxed in Malaysia under the PUA 323/2017. So this is a sad thing that we have made amendments to the law, but the government has actually overturned it and come up with this exemption order. So wherever services which are performed from outside Malaysia, they are still not subject to tax under section 4 capital A. So this is where we need to look into what we have made amendments and to be at par internationally, but the industry themselves will not agree to this amendment. So we'll try to move and see whether we can actually revoke this exemption order to ensure that we can also tax on the services rendered from outside. So it's meaningless that we have actually made amendments on the 17th of January 2017 because the law still relates to the previous, which we have actually said that only services performed in Malaysia would be taxable under section 4 capital A. And performance of services within and outside Malaysia, if let's say there are services which are made within and outside Malaysia, must be proportion of contract value that is attributable to services performed in Malaysia. Since whatever services which are performed from outside is exempted, if let's say the non-resident performs both within and outside Malaysia. So there must be a proportion of contract value to be made, and this apportionment based on the value of services performed in Malaysia, because it's taxable under 4A for services performed in Malaysia, and services performed in Malaysia will then be subject to withholding tax under section 109 B. Alright? Okay. Next, what is under the paragraph 4A(1) of the Income Tax Act that explains services rendered in connection with the use or installation or operation of assets, where we have the use of property or rights, provision of personnel for advisory or supervisory services, and we would have the installation or operation of any plant, machinery, or other apparatus purchased. This is for installation and commissioning services. Alright, so it further explains the use of property or rights, provision of personnel for advisory or supervisory services. So the public ruling explains on the examples what does it mean by 4A Roman 1 services. So A. Berhad bought a power plant from B Limited, a company resident in India, on 1st March 2017. So for this purpose, B Limited sent 2 of its engineers to Malaysia to supervise the installation and operation of the plant from 15th of April 2017 to 31st May 2017. So the fees paid to B Limited for the services was 100,000 ringgit. So what is the conclusion? The fees paid for services rendered by the employees of B Limited in connection with the installation of a plant purchased from B Limited are deemed derived from Malaysia and chargeable to tax under 4A Roman 1 of the Income Tax Act. Right? So that's where the public ruling would explain on the examples of 4A1. And the gross amount paid to B Limited is subject to withholding tax under section 109B. This is the calculation of the rate of 10%, which is of the 100,000 ringgit. Right, so this is the first example. Next will be the installation or operation of any plant, machinery, or other apparatus purchased, or in relation to installation and commissioning of services. So the example given under the public ruling is Champ Limited, a company resident in India, sold 3 stainless steel boilers to Double Steel Berhad, a steel manufacturer in Malaysia, at a price of RM 1 million in March 2017. So it was agreed that an additional sum of 100,000 ringgit was payable to Cham Limited for the installation, services, and commissioning of the boilers in Malaysia and at the Malaysia Company's branch in United States of America in April 2017. So the payment for services rendered by Cham Limited in connection with the installation and commissioning of a plant purchased from Cham Limited inside and outside Malaysia by Cham Limited are deemed derived from Malaysia and chargeable to tax under 4A1 of the Income Tax Act. So the gross amount paid to Cham Limited is subject to withholding tax under 109B of the Income Tax Act at the rate of 10%. So on whatever services which are performed in Malaysia will be subject to section 109B of the Income Tax Act. So this is the explanation under the 4A Roman 1 of the ITA. We will take a break and I will then explain on the rest of the paragraphs. Thank you. Alright, welcome back. So I'll continue, but first I will just repeat the example that has been given just now, right? So the installation and commissioning services, Cham Limited, this is a company resident in India, right? So company in Malaysia, which is Double Steel Sdn Bhd, which is a steel manufacturer, so buys this boiler, okay, at RM 1 million, March 2017. So the additional cost of 100,000 was payable to CHAM Limited for the installation services and commissioning of the boilers in Malaysia. So which means when they buy the boilers, there must be services and commissioning for the installation of the boilers. So the cost related to those services is amounting to RM 100,000, right? So the boilers are in Malaysia and at the Malaysia's company's branch in United States in April 2017, right? So this is Malaysia's company branch in the US, right? So the payment of services rendered by CHAM Limited in connection with any installation or commissioning which is purchased from CHAM Limited in and outside Malaysia by CHAM Limited, okay, are derived from Malaysia. So whatever services which are performed in Malaysia in relation to the services and commissioning of the boilers in Malaysia will be subject to 109 capital B. If there are services which are performed from outside Malaysia, therefore, it is not subject to 4 capital A due to the exemption order that has been issued, right? Okay, we'll go to the next slide. Paragraph 4 capital A Roman 2 of the Income Tax Act. Okay, technical advice, assistance or services rendered in connection with technical management or administration of any scientific, industrial or commercial undertaking, venture, project or scheme. So what I've explained just now, this is the current law when the public ruling has been published, which is on 5th December, without the amendments that we have made in 2019 budget. Okay. What does it mean by administration? Okay, so it includes management or administration services. So it can cover non-technical assistance, non-technical services, management and administrative functions. So this we have explained in this public ruling and also in the previous public rulings. In the public ruling, 4 capital A does not only consist of technical, although the word there is technical management, but it also covers the non-technical assistance, non-technical services, because it will be in connection with any scientific, industrial or commercial undertaking, venture, project or scheme. So it can be non-technical as well. So the management and administrative functions will be planning, direction, control, coordination. These are all examples, yeah? Accounting, financial management, consultation, labor negotiations. Because we know multinationals would have lots of management and administrative functions that they pay to their counterpart outside Malaysia. So that's why we have made amendments to this law, because we want to ensure that the base erosion of profit shifting is being curbed by the amendment, so that we make sure that all the multinationals will then be subject to Section 4 capital A. But the sad thing is, because of the exemption order, we can't still tax them. So technical management includes the passing over or utilization of expert or specialized knowledge, skills or expertise. These would be provisions of marketing, consultancy and legal services, supply of technical and software personnel, intercompany technical services and technical support such as testing and calibration. This is also where the loophole for multinationals, where they have intercompany services which they pay in huge amount every year, right? So this is the 4 capital A Roman 2 kind of services. You can also refer to the public ruling, right, which explains further in paragraph 7 what does it mean by management and marketing services. What does it mean by consultancy services? We have a lot of examples in the public ruling. So please refer to the public ruling for further clarification and also illustration. Then we have the paragraph 4 capital A Roman 3 of the Income Tax Act. What does it mean? Rent or other payments made under any agreement for use of movable property. So we have the taxable paragraph, which is for capital A Roman 3. We have the non-taxable paragraph for capital A Roman 3. We have those that which are not taxable. So we explain further in this public ruling. And we also explain some income tax exemption orders that we have in place to exempt them from the section for capital A. Alright, what are taxable? Rent or other payments made for the use of oil rigs, boats, ships, cars, aircraft, or other equipment inside or outside Malaysia. And the withholding tax is section 109B of 10%. And we have examples in the public ruling which can cover the slot hire charter, leasing of ships or aircrafts, time charter, voyage charter. We know leasing of ships and aircrafts, we have lots in Labuan, but we also have income tax exemption order that exempts them from this section for capital A Roman 3. So what are not taxable? Okay, we have explained in the public ruling, although we say those rents or other payments are taxable under this provision, we would have also freight charges which are paid to non-residents in respect of export or import of goods do not fall within the scope of section 4 capital A of Roman 3. So we have exclusions which is not covered under the 4 capital A. But other fees for the shipment of goods such as handling fees and agency service fees falls under the 4 capital A Roman 2 of the ITA, which is going back to the services rendered on the technical management and so forth, will be subject to withholding tax under section 109B, which is 10%, because it is considered as services, right? And we would have income tax exemption orders. There are some examples that we have quoted in the public ruling. We have the PUA 322/1995 on pooling arrangements. These are also exempted under the 4 capital A. PUA 58/2007, income received from a Malaysian shipping company. So also being exempted under this PUA. And we also have the PUA 210 of 2002, income derived from the rental of international standard organization by Malaysian shipping company. So these are the few examples that we have mentioned in the public ruling, of which you can refer to see whether they are, to see on the examples that we have given exemptions. Okay? So next would be the determination of section 4 capital A in certain cases. So in the course of rendering services to the payer or in respect of the use of any movable property, so these scenarios may occur. They might include reimbursements, disbursements, advance payments, or deposits, right? This is normal that you would have all these costs also in the payment to the non-resident. So what are reimbursements? Reimbursements refer to out-of-pocket expenses incurred by the payee and are subsequently reimbursed by the payer. So the non-resident will incur the expenses first, then it will be reimbursed by the resident in Malaysia. Disbursements are out-of-pocket expenses incurred by the payer and paid to third party on behalf of the payee. So we have a third party here where disbursements are being paid. So these reimbursements and disbursements, what does the public ruling explain? Some descriptions on what type of reimbursements that usually happen is under the accommodation, where part of the contract value would include the accommodation, where if it is part of the contract value, the income will, of the payee will be subject to withholding tax under 109 capital B. So if it is part and parcel of the contract value, if it is not, then it won't be subject to 109 capital B. Other than accommodation, which is cost of airfare, traveling, telephone, and photocopying charges, not included in the computation of gross income, and therefore would not be covered under the 109 capital B. Advance payments. You would have advance payments being paid to the non-residents and also deposits. If it is non-refundable and if it is part of the value of the contract value, it will be subject to 109B. If it is not, then you won't be subject to 109B. If it is refundable, it will not be included in the computation of gross income. So it's simple as that. If you have all these elements in the contract value, so this is the tax treatment. Okay? All right. So deduction of tax under Section 109 capital B of the Income Tax Act. All right, we have the chargeable under Section 4 capital A, which is the withholding tax or under Section 109 capital B at 10%. You would have withholding tax which are borne by the payee. You would have cases where withholding tax borne by the payer. So this is also in the previous public ruling that we have explained, but here we have some new positions that we have made in this public ruling. So this is the scenario where the withholding tax borne by the payee, right? So this is where a China company, all right, we call it as NWPL. You have the full name in the public ruling. The value of the services is RM 150,000, and invoice was issued on the 28th of April 2017. So payment was made on 8th of May 2017. The value is 135,000. Services performed in Malaysia within 16 April 2017 until 24th of April 2017. So TSB is the company in Malaysia with the accounting year end of 31st December every year. So in the public ruling mentions that how do you compute the withholding tax? Technical service fee is 150,000, right? And supposedly the amount is of withholding tax is 10% of the contract value of the services value, which is 15,000, right? So payment due to NWPL is 135,000. So the payment is made at the net, not at the gross. So tax treatment would be TSB should remit the withholding tax, right, of 15,000 to the DGIR within 1 month after the payment to NWPL, which has been paid or credited on or before 8th of June 2017, which is 1 month. Yeah. So the amount of technical service fee, fees that can be allowed as deduction under the TSB accounts would be the full amount of 150,000 because that's the contract value, and the 15,000 is being borne by the NWPL, right, which is a foreign company. So this is where a case withholding tax is borne by the payee. Next. All right, so this is the same provisions where the second case is withholding tax borne by the payer. All right. I'll just mention in scenario 2, example 15, which is under the public ruling, which is withholding tax borne by payer. The same thing, but NWPL receives a value of services of 150,000, the same date the invoice was issued. Payment was made at gross 150,000. Services performed within those dates. So the same example. So what is the tax treatment? Okay. Claimed in the profit and loss account, technical service fees 150,000. It is added on the withholding tax. Just now you less the withholding tax. Now this is added on the withholding tax, which is 15,000. So amount claimed in the profit and loss is 165,000. So the tax treatment would be the amount of technical service fee that can be allowed as a deduction for TSB in the year 2017 would only be 150,000, the gross amount. The withholding tax borne by NWPL of 15,000 is not an allowable expense because it is not wholly and exclusively incurred in the production of its gross income, because this is not under the normal circumstances whereby the payer has to bear the withholding tax. Usually when a company negotiates with another company outside Malaysia, it would have included all these elements in the normal business circumstances. So this is not the usual circumstance, so therefore it is not wholly and exclusively incurred in the production of its gross income. So I just need to highlight here in this public ruling that effective from the date of the publication of this public ruling, which is 5th December 2018, that the payment made to non-resident need not to be regrossed to determine the amount of withholding tax. Okay, I know there are a lot of issues here, whereby in the previous public ruling we have mentioned that the taxpayers have to regross on this issue of withholding taxes borne by the payer, right? So which means they have to pay 165,000. The 10% will be on the 165,000 instead of 10% out of the 150,000. You can look into the previous public ruling of 2014. The example is the same, but they have regrossed the amount, and the 10% have to be out from the 165,000, right? So that's where what we have made a stand in this new public ruling is that effective from this public ruling 5th December 2018, any payments made to the non-resident need not to be regrossed anymore following the previous public ruling. All right? Okay. Yeah, that's a question. All right?
According to the PR dated 3 December 2018,
Right.
regross tak perlu lagi,
Yeah.
tapi tarikh terpakai untuk transaksi bayaran dibuat kepada non-resident,
Right.
atau tarikh tu adalah remission of the cukai pegangan kepada LHDN.
Okay. All right. This is a very popular question. When we mention 5th December 2018, this date relates to what? The payment made to the non-resident ke atau when it is being remitted to DGIR? We go back to the section 109B. What does it say? Okay, it says that any payment made to non-residents that they have to remit to the DGIR within 1 month, like what I've mentioned just now. So the date of 5th December 2018 is actually the day that the company pays to the non-resident. 1 month after that, they have to remit. So if, let's say, a company pays to the non-resident 15 December 2018, do they need to regross or not? They don't have to regross because it's after the date of 5th December. But if the payment is made to non-resident is, let's say, on 1st December 2018, then the regrossing has to be done according to the previous public ruling. Okay? Okay.
Hello. Okay, Puan. Another question.
Yes.
Is the issue of the regrossing is not applicable to another withholding tax? That's under section 107A, A Roman and B, 109, 109A, 109B, and section 109F income tax.
Okay. Thank you for the question. So you have listed all other withholding taxes which are not covered under 4A. Yes. So this is also another favorite question that the branches have asked and also taxpayers have asked. So what we have come to a stand is that this is also applicable to other withholding taxes besides 4A. So which means this stand of not regrossing would also apply to other withholding taxes provisions besides section 4A. All right? Okay, I think we have to stop now. We have lots of questions here. Right, thank you very much. Welcome back. So now we're going to continue on the operation side, which is when does the withholding of the 1 month starts and what happens if there's any public holidays that falls into those dates. So first, a payer or person carrying on a business in Malaysia, so the responsibility to deduct and remit. Clarification on due date of payment is if the last day is Saturday or Sunday or public holiday, the following working day considered as the due date for payment, right? So period to remit payment, which is 1 month after paying or crediting the expense, right? And if there's a failure to deduct or remit, it will be increased by 10% of the amount of withholding tax fails to pay. Disallowed payment, Section 4 capital B, as an expense in the computation of the adjusted income. If you do not withhold, it will be not a deductible expense, right? And penalty under Section 1132 will then be imposed. This is with effect from 1st January 2011. So appeal by payer or under Section 109 capital H, 30 days from the date the amount is due to be made to the DGIR, except if the non-resident person has filed an appeal to the Special Commissioner in relation to the payment under Section 4 capital A. And payment, Section 4 capital A, to the non-resident has been disallowed as a deduction, and the withholding tax due has not been paid. So this is with effect from 1st January 2013 on the appeals that the payer can make. For application for relief under Section 131 capital A that we have made amendments in Budget 2017, this is with effect from 1st January 2017, within 1 year after the end of the year the payment is made, then these non-residents can actually apply for a relief, right? So this is the operational part on the payment side, and what happens if payment is not made, and if, let's say, the taxpayers want to appeal, how does the appeal goes through, okay? So this is the slide explaining on this. We would also have deductions under this, under the 109 capital B of the Income Tax Act. We have tax incentives, deductions disallowed under paragraph 39(1)(f), and under the other paragraphs, which are not applicable to, so these are the provisions we say that 39(1)(f), 39(1)(l) are not applicable to a payer who enjoy tax exemption under the Promotions of Investments Act PIA, or any incentives under paragraph 1273B or subsection 1273 capital A, Minister's Power, right? So any taxpayers that enjoy any incentives under these exemptions, so deductions which are disallowed on the withholding tax not remitted, are not applicable. Okay, so this is under this public ruling that explains on the companies that are enjoying tax incentives. Secondly, fails to remit withholding tax on the expenditure incurred and payable to a non-resident in respect of interest or royalties, Section 109, contract payments, Section 107 capital A, or any payment under Section 109 capital B or 109 capital F, except on income equal to capital expenditure incurred under the investment tax allowance. So we have exceptions there that for any incentives which is covered under the income tax allowance, this disallowance under these paragraphs are applicable to them. So you have those which are exempted under the Minister's Power for exemption of income, because we know we have two kinds of incentive. Exemption of income, which is you exempt the income of the company, or you would have exemption of income equivalent to the capital expenditure incurred. So we have two kinds of incentives. So if the first group of exemption of income that do not remit the withholding tax on all those payments, the deductions disallowed are not applicable. But if the company is receiving any income tax exemption equivalent to capital expenditure incurred, the disallowance would apply to them. So that is where the public ruling explains on this tax incentives position. And we have three categories of DTAs where whatever it is, DTA prevails. We would have our domestic law that we say these are chargeable to Section 4 capital A, but we will also have DTAs that includes technical fees, fees for technical services article would be subject to withholding tax in Malaysia. If DTAs do not have any technical fees or fees for technical services article, then they would refer to the royalty article or other income article or income not expressly mentioned article wherever it is applicable. Okay? So Malaysia has not entered into a DTA or there is a limited DTA with a particular country. The domestic law of Malaysia shall prevail. Right? And we would also have mutual understanding specific to the DTA between Malaysia and Australia. So this is one of the examples that we have mentioned in the public ruling to explain on the position of DTAs. Okay? So we have an example here, which is example 22 of the public ruling. This is on the computation of the additional assessment for year of assessment 2015. So you would have a deemed assessment, 250,000 of this company. So tax payable will be 1 million out of the 25% out of the 1 million, which is the 250,000. So that's the deemed assessment. So then it is being audited by RBM. So there's an additional assessment. So the chargeable income is now chargeable income is still 1 million, but there's a technical service fee where this company has not complied to withhold. So there's a 50,000 technical service fee. So this will be a non-deductible expenses under the 39(1)(j). So late payment penalty, because since this is not deductible, so there's a late payment penalty of 2,500. And this is not deductible because this penalty is not incurred wholly or exclusively incurred in the production of gross income. So the adjusted chargeable income will be 105,500. So tax payable at 25% would be 263,125. The original tax payable is 250. So tax undeclared is 13,125. So penalty of 100% is imposed. So additional tax payable will be 26250. So this is the computation total sum due to the government, which is the 5,000 plus the increase of 10% penalty. It will be 5,500. Okay, so Malaysia, the section 109B, the company has not complied, so that's the 5,000 ringgit has to be remitted, and in October 2016, the field audit has been conducted. So this is the scenario where they have not remit and they have not withhold on this case for the 52,500 technical fees paid together with penalty. Okay, so this is just one example. We have other examples in the public ruling of which you can refer to as well. All right, so next is example 22 of public ruling. So what happens, the computation on the total sum due to the government, which is the 5,500 ringgit, DTA between Malaysia and India, since this is an Indian case. So Article 11 says penalty charges for late payment shall not be regarded as an interest for the purposes of Article 11. Thus, there is no withholding tax imposed on the amount of the late payment of 2,500. So these also lies on the DTA with the respective countries. Under the domestic law, Section 4B stated late payment interest is interest income under Section 4 small c, therefore 109 capital B applicable. But since DTA with India says it's not interest, so therefore there's no withholding tax that has to be remitted. Okay? So in the absence of a DTA between Malaysia and the country, the Malaysian law shall prevail. The domestic law will prevail. Okay? So next is the example 26, of which adjusted income after audit is 350,000. The technical service fee is 200,000 added on because it has not been withheld. So adjusted income is 550,000, less capital allowance 100,000, the statutory income is 450,000. Less the investment tax allowance, therefore I just mentioned about the incentives that has been given to a company, is restricted to 70%, is 350,000. So total income which is chargeable is 135,000. So investment tax allowance, you have a 6 million there, and you have the investment tax allowance absorbed from the previous year, 315,000. You have ITA of previous year of 6 million. You have the ITA which is currently 315. You have unabsorbed ITA of 5685, right? So the payment of 200,000 will be disallowed because for investment tax allowance, the disallowed applies. The disallowance apply. Okay? So this is where an example of a company having an incentive equivalent to investment tax allowance. Okay? All right. I think we take a break before I move on to the 15A amendments of 6 September 2017. Thank you. Welcome back. Before we move on to the next slide, I've received a question in the chat box which says that if the withholding tax is not regrossed, therefore the allowable deduction will only be the amount of payment made to the non-resident. Yes, that will be the amount that is paid to the non-resident will be the allowable deduction, and we will not be inclusive of the withholding tax amount remitted to IRB. All right, so that is the answer for the question. Thank you for the question. So next will be the existing contracts prior to the amendment of Section 15A of the Income Tax Act. So this is where the amendment that has been made in 2017, where we have said that wherever it is performed, it should not be exempted. Wherever it is performed, it should be subject to Section 4 capital A. But since there's a PUA to exempt, right, so that's where we can't tax them. So, but the PUA was issued on 6 September 2017. So what happens between 17 January 2017 until the Gazette that has been issued on 6th of September 2017? Do they have to comply with the provision? So definitely yes, they would have to comply with the provision within those period. All right? So let's say we have a date contract signed. So this is in the practice notes as well, but we have explained it as again in the public ruling. So when the date contract is signed 17th of January 2017 onwards, period of performance outside Malaysia is between 17 January until 5th of September 2017, the day before the order has been issued. Date payment made to non-resident is 17 January onwards. Yes, it is subject to 109 capital B. If contracts are being signed before 17 January 2017, so you have 3 situations where contract is signed before 17th of January 2017. And we have the first one is before 17th of January 2017, performance was being rendered. Date payment made to non-resident is before 17th of January or after 17 January, it doesn't make a difference. Still not subject to withholding tax because contract was signed before, performance was made before, payment either it's before or after, it is still not subject to the amendment of the Act. If contract is signed before 17th of January 2017, period of performance is between 17 January to 5th of September. Date of payment made is made before 17th of January. So you have the performance being made between those dates. And the payment was made before. So withholding tax is not applicable, right? Last scenario is that if the contract is also signed before 17th of January and performance is made same thing between 17th January until 5th of September, but payment is made after after 17th of January, therefore withholding tax would be applicable. So we try to put those scenarios that we have thought of, and this would be the position of the applicability of the withholding tax under section 109 capital B. And this is also, like what I have said, in the practice notes that we have issued as well. Okay, next is the withholding tax exemption on income for services performed outside Malaysia after 6th of September. So what happens after the amendment, after the POA that has been issued? We have the same scenarios as well, where date of contract, if it is signed on or after 6 September 2017, period of performance performed outside Malaysia on or after 6th of September 2017. Date of payment is also made on or after 6 September 2017. Therefore, it is under the exemption order not to withhold under 109 capital B. This one is just the normal circumstance. Under the understanding, it falls under the POA. What happens if the contract is signed before the POA has been issued, before 6th of September 2017, but performance is being made between 17 January until 5th of September? If payment is made no matter before or after 6th of September, yes, it will be subject to withholding tax because contract was signed before 6th of September. Even if the payment is made on or after the POA was gazetted, it is still subject to withholding tax. So the same thing, contract signed before 6th of September and performance was made after 6th of September onwards. And date of payment made to non-resident is before 6th of September. It is not subject to withholding, covered under the exemption order. If the contract is signed before 6 September and period of performance is 6 September onwards, date of payment made to non-resident is also 6 September onwards, so it is still not subject to 109 capital B. It is given under the exemption order, although it is signed before 6th of September, because whatever it is, the performance has been made after, payment also has been made after 6th of September 2017. So we have a note there, for contracts that are signed and payment has been made before 6th of September, but services are performed outside Malaysia on or after 6th of September, such payments are not subject to withholding tax, and a claim for a refund of the withholding tax paid can be made because this stand was issued after effect of those dates, whereby companies has actually withheld their withholding tax, okay, on the services performed. So they can actually claim a refund from our office, right? Okay. So that is actually my last slide, which covers most of the public ruling of 11/2018. So I do see that there are questions here. Maybe some of the questions I can't answer now, of which I will answer in maybe next week or the week after, because there are some questions that I need to discuss with the management of tax policy department. If, let's say, there are other further questions that the audience would like to pose, you can always post in this chat box, or you can also comment in the near future for us to answer. So, any questions from the floor? Salam.
Assalamualaikum Puan.
Ya.
Saya ada satu soalan saya pendek saja. Adakah transaksi digital terjatuh di bawah Seksyen 4A besar?
Alright, thank you so much. Adakah terjatuh bawah Section 4A, 4 capital A? This is also a favourite question whereby when we actually amended our law in 2017 to say that wherever services are performed, it will be taxed under Section 4 capital A, and this has actually menjadikan kerisauan lah kepada taxpayers, especially those which have online transactions, online services being given under platforms. So they would ask whether they do fall under Section 4 capital A, since our law has also been amended to say that it does not cover technical, it can also cover non-technical. So we do have examples like we have companies that actually do online advertising, and we also have come out with a practice note on online advertising, of which we say that whatever it is, kita kena tengok contract, kita kena tengok agreement yang dia buat bersama dengan company. We do not have any other choices. We must look into contracts and agreements before we conclude whether it is Section 4 capital A technical service ataupun it falls under royalty. So that is where we have put in the practice notes. Because online advertising ni, they would say that they would have lots of services that they would provide. But sometimes it's just a mean of advertisement. Dulu kita buat konvensional, kita buat dalam paper, kita buat dalam majalah. Sekarang ni kita buat dalam komputer. We do it in the we put it in the Facebook, we put it in Instagram. So that's the medium. That's the only the medium. It doesn't make a difference. Satu dalam paper, newspaper, satu dalam online. So why now if it is online, I terkena bawah 4 capital A ataupun royalty? That is not fair. But we have to see what kind of service that they perform, because that's why I said whatever it is, you have to go back to the contract or the agreement that has been made. If it is skewed to royalty, then royalty would be charged, right, to the company, because it's the right to use of using that platform. They make payments to that for that usage. But there might be cases whereby they are only providing a service for them to put their advertisement in the platform. They can't make any amendments or adjustments to the advertisement. It is already a standard advertisement there. So that's where we say that it falls under 4 capital A as a service. So that is one of the digital transaction that we have explained in the practice notes on digital advertising. But there are other cases where they might not fall into those criteria, of which they are still not in the net of our taxation. So that's why now we are looking into our guidelines of digital economy, and also we have forwarded for the Minister of Finance to also look into the policy, and we are also part of the Action 1 BAPS that we have to look into on this international developments on digital transactions. So itu je yang saya boleh jawab buat masa ni. So I guess this would be the end of my presentation for this topic of Public Ruling 11/2018. I believe this is the first, and we will continue to have this. Dan saya juga di bahagian ketetapan akan merancang untuk membuat juga taklimat selain daripada taklimat yang lain berkaitan dengan KU-KU yang kami keluarkan, which is the latest, untuk menerangkan apa dia pendirian yang LHDN telah buat. And saya juga mengharapkan feedbacks, ya, maklum balas daripada semua viewers, apa yang perlu ditambah baik, apa tajuk-tajuk yang diperlukan untuk JDP cuba usahakan selepas ini melalui YouTube Arena Hasil. So terima kasih atas semua yang dapat meluangkan masa pada hari ini, and I'm quite surprised that we can stand until like almost 1.5 hours. So thank you very much to everyone and hope to see you again.